Hey everyone, welcome back to Upside Down Data. Today I want to talk a bit about Bitcoin, whether or not we can hold these current levels or if we might have further to fall. So for some context, obviously we're in a case right now where a lot of regulatory action has been happening in the crypto space. The SEC has come out against both Binance and Coinbase, and in so doing, they have also labeled a number of altcoins as being securities. So a number of altcoins have not been faring well at all more recently. But Bitcoin has been relatively spared. At least, it's only indirectly affected. Bitcoin itself is not really in the spotlight for potentially being a security. And so given that Bitcoin has been leading this rally ever since the beginning of the year, really, and because of all these regulatory headwinds that a lot of altcoins face, I think it's a reasonable expectation to have that if anything interesting happens in crypto or anything exciting, Bitcoin's probably going to be leading the way. Still, it's unlikely that we're just going to get another big alt season with everything that's going on right now. Obviously, that's not impossible, but it would not be my base case. So that's why I want to focus on Bitcoin and whether or not it seems reasonable to expect that Bitcoin could hold these current levels, or if it might need to correct more deeply down to some of these prior levels. Then if the worst case scenario, would it actually set in new lows? So to set the stage for this conversation, I want to talk a little bit about our trend confidence indicator. This is a metric that we have here on the channel and on our website, claritydigital.io, link in the description. It's a website we've put out in collaboration with Jay over at Daily Crypto Analysis. Link to his channel in the description. Definitely recommend checking it out. So the TCI is an indicator that's looking at trend and how confident we should be in a given trend. So if you're above zero, kind of higher values on the TCI, mean that you're likely in an uptrend or a new uptrend is likely to be forming soon. And then as it gets more extreme, kind of the more confidence you can be that you're in that uptrend or that one's about to start. And then, vice versa, if you're below zero, that means that you're either likely in a downtrend or one is likely to be forming soon. And so you'll note that going into the beginning of this year, the TCI started getting really excited, exploded to the upside. But another thing that you can look at with the TCI is not just its absolute level, but also its behavior. You'll note that the TCI got really excited as we had this initial rally in the beginning of the year. But then even as we put in kind of the top of this first part of the rally here, you'll notice that the TCI was really falling off. And it put in a lower high than it did back here. And with a metric like the TCI, that would be what you call a bearish divergence. When prices in an uptrend is moving up, setting in higher highs, but the metric, in this case the TCI, is setting in a lower high. And that's concerning. And indeed, what we ended up seeing coming off of this was this deep correction into the middle of March. But then rallying out of that into kind of the second leg of this rally, see the TCI moved up again, but importantly, it didn't get up anywhere close to where it was back in this rally. You'll notice this massive bearish divergence here where price is setting in a new high, but the TCI is setting in lower highs. And in fact, the absolute high that we had over here, the TCI set even in a lower high than it did back here. With the TCI, when you start seeing these divergences, it can be a sign for concern and that the momentum is leaving the rally. And that's indeed, what we've seen is that ever kind of since we started seeing these bearish divergences, price has now had a difficult time getting back into a bullish footing. It's really just been kind of moving down slowly or sideways, nothing really too exciting happening. The TCI is now in a solidly negative territory where it thinks that this is, as far as it's seeing, this downtrend we're seeing right here is believable. And right now, at least so far, I haven't seen any reason to be second guessing that. And so that's kind of a concerning trend. And so based on that, you might think, all right, that means that price is just going to fall off a cliff and we're just going to go down into the dumpster. Certainly possible. But one of the things I want to talk about on the flip side is there are some reasons to think that these current levels could act as decent support levels. So one of the kind of technical levels we can look at is the 200-week simple moving average. And this is one that people have paid attention to a lot in Bitcoin's history because it's acted as key support in a lot of different critical times in Bitcoin's past. In 2015, more or less setting the bottom. In 2018, more or less being the bottom. 2020, more or less being support, but actually it crashed lower than that, then just quickly rebounded above it. But then more recently, we acted as resistance in the first leg of this rally into the beginning of the year. But now it also looks like it might be trying to act as support. We have a number of tests of it this wick here, these two wicks over here, and then we closed below it, but then quickly rebounded above it, and now we've just been kind of grinding along it the last couple of days. And so given that this is a level that a lot of people watch, certainly the more that you test it, the more likely it is to break. But so far, so good. We've been able to hold it as support, and it's probably a level a lot of people are watching, might see it as a relative value zone, or at least people might be willing to step in to defend that level. So that's one thing we can look at. Another thing we can look at, though, is on-chain data to see what that can tell us about where we are right now. So I'm flipping over here to show you the short-term holder cost basis for Bitcoin. And so essentially what that is the average cost basis of people who've been holding Bitcoin for less than around 140 to 150 days. Depends on who's putting together the on-chain data of how they define it, but it's roughly in that ballpark. And so this is what's called the realized price, the short-term holder realized price. And it's called that because essentially anytime a Bitcoin is spent on chain, then someone else is buying it. And so when that person buys the Bitcoin, that becomes their realized, or excuse me, when you sell a Bitcoin, that becomes your realized price. You sold it at that price. Then for whoever bought it, it becomes their cost basis. It's the cost at which they bought it. So that's why we can think of this as the short-term holder kind of average cost basis. So them as a group, what is their average cost basis? You can see that this has been an important level for Bitcoin in the past. We more or less held it as support back in September of 2021 before going on to put in the ultimate top in November. We got rejected more or less off of it in April, late March and early April of 2022 before going all the way down and got rejected off it again right before the FTX collapse. Then we more or less held it as support with that correction that we saw in mid-March. And now look where we are. We're right back to holding it, or to basically retesting it. Basically be more or less bouncing along it in the more recent time. And this is important to watch because essentially, if there are a bunch of people who have their cost basis at that level, they're probably going to be paying a lot of attention to what Bitcoin's doing. This is something we talked about in the context of a psychological theory known as prospect theory, where essentially when you're in near your cost basis, when you're near neutral, relative movements of, in this case, price near to that cost basis are going to be more psychologically impactful than ones that are more extremely far away. Super extreme losses, super extreme gains, and let's say a move of $1,000 in Bitcoin's price is not going to mean that much. But a move of $1,000 when it's right next to your cost basis will, because you're either right at break even, a bit above break even, or below break even. People don't like being in loss, so they pay a lot of attention, and they're just going to be more likely to be watching. And it might also just be a level that they're willing to step in and reinvest in. If their cost basis is there, they might see price getting back to that level as being a relative bargain, or if they saw it as being worth buying at the first time, at time one, maybe they'll see it worth buying again at time two. So it's an important level to watch. And it's just confluence. It's confluence with the 200-week moving average. We have this other here, in this case, on-chain reason, this kind of psychological realized price cost basis potential reason to be watching this. Now, even if we lose the short-term holder realized price, and even if we lose the 200-week moving average, that doesn't mean that we necessarily just have to have the bottom fall out and we go all the way back down to the lows of the bear market. So what I'm showing you here is the distribution of realized price across basically Bitcoin price. So basically all the way down from zero up to the all-time high price. Where are the majority of people's cost bases? Where are the majority of realized prices? And so what we can see is that, obviously there's a bunch of long-term holders, people have been holding for 4 to 8 years or more that are way down in these levels, but those aren't particularly relevant right now. And there are a bunch of people who are still holding, a bunch of long-term holders, they're still holding from the bull market in 2021, 2022, up above these levels. But importantly, there's also a growing pretty massive cohort who are soon to be aging into the long-term holder, or either have or soon to be aging into the long-term holder category, kind of over 140 days. We're sitting right below where we are right now. We're currently trading in the 26K range right now. But these are sitting, more or less about 24K, 23K, 22, etc. People who are buying in to Bitcoin, back more or less through these phases back through here. And so there are a lot of them who sit through here. So even if we lose the 200-week moving average, even if we lose short-term holder realized costs, we'd be hitting a lot of these people's cost bases not too long after that. And so sure, may not hold forever, but I think it would be reasonable to expect price to at least find some support somewhere in this massive swell of cost basis that exists over here before we get back down at those really deep levels like we see back over here, the 17, 16K range all the way back here. Nothing's guaranteed, of course, and certainly if there's something that changes more fundamentally, let's say we hit a recession and the stock market falls off a cliff, or let's say there's some really big disaster that happens in the crypto space. Let's say that the SEC gets even more, aggressive, or something like that happens, or if the court rules against XRP and rules it's security. There's a lot of different shocks that could happen that could send things lower. But, kind of assuming that nothing's too extreme like that happens, and if there's just kind of more organic price movement, I think we can expect this level to potentially hold. So even if we slice down to these levels, expecting this general range to act as support is not totally unreasonable based on what we're seeing here. Now, the final thing I wanted to talk about is just when we think about who's been doing the selling, where have they been selling from in terms of their cost basis, and where has that been going? So here I basically stripped out a lot of what's shown on this chart, and all I'm showing you here is the reduced short-term holder supply. So these would be short-term holders who sold and what their cost basis was. So basically the cost basis of the people who sold who were short-term holders. Reduced long-term holder supply. So these are long-term holders who sold in the last 30 days and where their cost basis was. And then we're also just seeing where is the new short-term holder supply showing up. And unsurprisingly, it's right at the price levels that we've generally been at, because that's kind of by definition the way it has to be. Then also the long-term holder supply increases. So people who are aging into the long-term holder cohort, where are their cost bases? And I think an interesting picture is being painted here, where a lot of the short-term holders, there's a big chunk here down at 17K who sold up in these, the past 30 days to make a profit, kind of swing traders who are doing that. But a lot of people have been capitulating from these higher prices. What you have really, what you're seeing, is an awful lot of people who are buying Bitcoin up in these levels, up towards this local top. So again, probably people FOMOing in, people kind of buying in a lot here, thinking that Bitcoin's going to go up higher. Then as prices been kind of grinding down, they get scared, and now they're capitulating. They're selling back out and just realizing a loss. They're saying, price is down, like let's say, as in general, like for example, I'm down 13% on my investment, but I think things are going lower. I'm just going to sell now to get out. That's kind of what more or less these people are doing here. And then notably, there's been a lot of long-term holders who are, aging in, back down from these levels. When we look at long-term holders selling, it's not really the kind of what you might think of the OG or the really kind of older coins, sitting down in cost bases below 10K who are selling. There's a sprinkling of them, not a whole lot. It's really more or less been people who are buying at these kind of 20K, 23K levels. Really people who are buying, probably who bought here, held throughout the FTX collapse, and then decided, you know what, I'm up on my investment, I've gotten above it. I don't really necessarily trust Bitcoin to stay above these levels. So I'm just going to lock in the profit now while I can. And again, as we're getting closer to that cost basis, they're probably paying more attention and saying, I'd rather not break even. I definitely don't want to sell for a loss because people don't like to sell for a loss. It's loss aversion. So just lock in whatever small profit because I think things are going lower is probably at least one of the reasons that's driving some of this selling down here. And so I think this gives us a nice picture of what's going on with Bitcoin, both kind of technically and on chain, where we're kind of getting to these levels of potential strong support, or at least technical levels that seem like they'd be reasonable to expect act as decent support. So that'd be the 200-week moving average along with the short-term holder realized price. But then also we know that there's a lot of cost basis that sits below those levels still as well. And just from a pure technical analysis perspective, you might also expect these levels to act as support should we go back down and retest them. You might expect a lot of support technically from this level acting as the top here, get down. I hope to flip that into support if we get down there. Then also we just look at what's going on chain. We can see that in terms of long-term holders, there hasn't been a lot of capitulation, a lot of panic, especially about people who've been holding for a long time. It's more or less just been people who are kind of more longer-term swing trade who had bought in back here, selling out over here. And so there doesn't seem to be that long-term holder panic or that capitulation, which was more what we saw kind of going into some of this, where we saw more older coins starting to spend into some of these levels. So obviously anything could happen. There's a lot that's going on in the market. There's a lot of shoes that could drop that could send the market lower. When I'm looking at this, I'm thinking that there's a reasonable chance that Bitcoin could hold these levels. And again, I think that any kind of black swan event or kind of surprises can send all this out the window. And then, people might totally change what they think the fair value of Bitcoin is. But short of that happening, There's a lot of doom I'm seeing on crypto Twitter. The sentiment's really kind of starting to flip negative. People think things could go lower. I'm not quite there yet. So certainly we'd like to see more bullish price action from Bitcoin to get too excited. I'd like to see the TCI start reversing and going back above zero, for example. But until we get to that point, I think it's also a perfectly reasonable expectation to think that Bitcoin might just kind of continue to grind along in these levels, kind of chop around sideways, be very boring before we see anything too exciting happen. That's kind of the way that people oftentimes think in binaries. It's either going to go up or down, but just as possible, it could just go sideways and be quite boring. All right, so that kind of wraps up what I wanted to talk about here. So one of the things I also just wanted to give a quick reminder of, so over at our website, polaritydigital.io, we're actually going to be launching our subscription service, Polarity Digital Pro, on the 13th, June 13th. And we're going to be having a one-day sale on that launch day where we're going to be giving a rate of $10 per month to lock in on that day only, which we think is an absolute steal. It'll give access to not just models like the TCI and other models that are currently on the website, but also to new models like our forecast model that forecasts whether the price of an asset will be higher or lower in 6 months, and some macro trend models that can help identify, are we in bull or bear markets. So if you're interested in market calendars, we're also going to be setting up more reminders both here on YouTube and on Twitter before then. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates about indicators and more over there.